Welcome, everyone, to Name Confidential Live.
Welcome, everybody, to Name Confidential Season 2, Episode 15. I am your host, Ben Fox, and today I have the pleasure of introducing our new speaker, Eduardus Christmas. Eduardus is the CIO of Christmas Corporation, an investment management group in Berkeley, California. But today he's joining us all the way over there in Indonesia. So how are you doing, Eduardus?
I'm good, Ben. Thank you. How are you?
Good. I'm glad to finally be at Friday. It's been a very eventful week in the market.
Yes, correct.
Well, perfect. I know that we're going to be using kind of your presentation here as a guide for our conversation. And I believe on the next slide, you do have the name exposure index, which we generally cover in the beginning of these episodes.
Yeah, sure, Ben. Please.
And then just as a reminder for everybody, the name exposure index is the name member's average exposure to the US equity markets. I believe, because we don't have the numbers on here, but I grabbed them, it was at 56.96% this week, a little bit higher than the previous week where it was at 49.37%. So we did see a little bit of a tick up. And I know on the website, I had looked to see if there was anybody who was fully bearish as well, because I knew what happened the next day after we reported those numbers. And luckily, there was actually nobody who was the lowest was in cash, the lowest position for this week. So hopefully there were some name members in that caught the uptick that we saw the crazy market day on Thursday. So anyway, like, do you have any thoughts about the name exposure index, how you use it, or just anything along those lines?
Yeah, actually, I'm pretty surprised that the lowest one in this in 2025 was actually about 50, if I'm right. But the uptick is a little bit slow because maybe it's on Wednesday. I guess if it's were on if it wasn't on Thursday, I mean, I guess will be much jumping.
Yeah, it'll be interesting to see how much it would have changed. I know, we have a blend of people who, make daily decisions, weekly decisions, and more long-term decisions too. So it would be more of those maybe weekly or daily active managers that would have influenced that signal changing.
Yeah, you see. Yeah,
It is
actually,
interesting to see it. Oh, sorry.
sorry.
Well, I was just saying it is
Yeah.
interesting to see it at 50. I'm always curious to see how low it gets. It looks like it got down to around 25 in October of 2023, but the lowest it's gotten, I think 49, I think, was the lowest we've seen in 2025. So that's
Yeah.
just a curious thought there, and I wonder if people were holding some equity in there, hoping for a buyback, especially after we saw the really volatile days last Thursday and Friday.
Yep. Yeah, actually, the winner of this year is volatility.
Yeah.
So
Oh yeah.
I think the fix never gets lower than 40.
Yeah, I mean, this whole week there was so much going on. I mean, every day had its own story. I mean, I think it was Monday when the false tweet or whatever, or X post
Yep.
came out. You saw it jump up, and then immediately there was like, oh, this is
And then
false. Now
went
we're
down
gonna fall
again.
back down. And then it just kind of bobbed and weaved between, being up a little bit or down a little bit the whole entire day. And then Tuesday was Tuesday, did it start up and then it ended up just losing a lot of its yeah. And then I'm trying to remember what Wednesday was. I don't know. I remember Thursday and Friday, or no, I remember Wednesday. And now I'm thinking about it. When was the big day? Was that now Wednesday? Because I think I'm mixing that up in my head now.
Yeah,
Yeah, it was
Wednesday.
Wednesday. Because then Thursday
Wednesday.
we saw the decline after. But I was mixing it up in my head. But either way, that would have remained the same because the percentage that day that they post for NAAIM would have still meant that nobody was 200% inverse like we had seen in previous weeks.
Okay. Yeah. Yeah, over the last several weeks, if you see the pattern, the futures start with red and then green and then like jump up, and on the opening, usually like just a sideways situation, kind of 20 basis points up and down, and then by noon, I guess by about 12 p.m., it went like, -3 or +3% at least. And you couldn't even guess the ending, the closing price.
Oh no, it was a crazy week. I know in our office we would kind of bet internally, like, where do you think it's going to end today? And one of our other advisors joked, he's like, I'm not even going to pay attention until noon, until there's at least 3 hours before market close here at Central Time. So yeah, it was it's a very interesting week.
Very interesting. Actually, weeks.
Yeah. Oh yeah, it has been. Yeah, I don't think it's going to stop. It's going to continue.
Yeah.
Do you have anything else you want to add on the name exposure index, or do you want to move on to the next slide?
Yeah, maybe we can move on to the next slide first.
Okay.
Okay. Yeah, actually, what I want to discuss with you, Ben, is focus on the tariff and the panic in the market about the tariffs. And not only that, because some discussion in social media, such as LinkedIn or X, they were talking about, Great Depression, or they are going back further into the time of 1930 at the onset of Great Depression, with Smoot-Hawley tariff that decreased the global trade by more than 40 or maybe even 50% of the global trade at that time, and worsening the condition of the Great Depression around the world. But I found some interesting matter about tariff. In 1922, they also had Fort Macomber tariff in 1922. This is on the onset of Roaring 20, the post-World War I boom, and accompanied by several tax cuts by the Harding and Coolidge administration in 1921, 24, and 26. Actually, I don't want to say like I'm pro to the left side or the Fort Macomber side, but I just want to get some balanced view on the tariff at that time, because my friends, my colleagues also asking me about the Smoot-Hawley tariff, because that's the only thing that they know. And actually, I just knew that there was a Fort Macomber tariff like several days ago. So I just learned about the impact, the different impact. I guess the different impact is also because of the different background at the moment at that time. So yeah, and yeah, if you see it on the table, the economic theme of Smoot-Hawley tariff at that time was a great panic. You do protectionism in times of panic. In Fort Macomber case, you do protectionism during prosperity, actually, at that time, because the support of the internal party of Warren Harding and Calvin Coolidge at that time was strong. And the post-World War, the economic, it went high inflation before at the end of 1919, I guess, or 1918. but starting to slow. And then after tax cuts in 1921 and 1924, jobs were booming. There are so many opportunities out there, and also the negative side was so many speculations in the market. Yeah. Later on in 1929, the Federal Reserve took action with tightening the monetary policy, and then suddenly the markets stopped working for the investors, and especially the highly leveraged traders. So actually, it was a very different situation for Fort Nimacumber tariff, and we have to. My message in this comparison is we have to look at every case and every situation before thinking about, is this tariff in 2025 going to be like smooth holy or not?
Mm-hmm.
Just to give more balanced views. Okay, update on Liberation Day after April 2nd. Many economists said that this reciprocal tariff, is not on the economics or scientific calculation or something, but I guess this is more of a game theory situation. So this is actually microeconomics 101 instead of macroeconomics. Yep. What my guess is that, and so far, based on the news that we received up to like a day or two ago, some countries have been trying to negotiate, including one of the biggest trading partners with the US, Japan, South Korea, UK, and Switzerland, and including Indonesia already calling the White House team. But some countries have retaliated. The most is China and Canada. European Union, I guess they were offered something by China, and they're still, I guess, thinking deeply about it.
Yeah, that's what I remember hearing. Okay.
But after the president's Truth Social post about it's great time to buy, and then a window of 1 hour or 2 hours, and the tariff was postponed for about 75 countries, I guess. So maybe the intention is only for China, I guess.
Yeah. I mean, that whole concept there has been debated back and forth. Is this, kind of a way to single out who some say is our biggest enemy in China, or is it trying to really even the playing field all across these different countries?
Yeah.
And there's definitely viewpoints on both sides of those. And the thing that, at least in my opinion, it's hard to follow what President Trump is doing, in the sense of like what he says is it can change so much, but
Yeah.
you kind of have to like take a step back and look at not necessarily the short term, but the long term picture is the way that I think about it. Because in the short term, it seems like a very tactical way of kind of like negotiating it, so
Yeah.
things can change on a case by
Yeah.
case basis, day by day basis.
Yeah, I believe so. That's why I call it like not a macroeconomic situation, but it's more like a game theory or microeconomic
Yeah, and
playing
it's crazy to
here.
see the impact that almost just his words can have on the market right now.
Mm,
I don't know if I've seen that kind of impact before. Where I mean, I was telling a lot of clients, this would have been on on Friday, the second day after the tariff announcement. They're like, one of our systems went back long. So it was sitting in cash those 2 days. It avoided that, but then went back long on that Monday. And they're like, well, what in the world are you guys doing going back long? And I'm like, well, they're sensing a correction. They're sensing some that I was what I said, like they're sensing a correction over here, but really in reality, there's a big chance that if we get a sliver of good news, or even what we see as good news, that this market's about to shoot up. And then lo and behold, 2 days later, the tweet and then everything after that, it was
Yeah.
it was a crazy day for me to witness, because I think the biggest days that I saw were in 2020. And I know for the NASDAQ, because that's what we trade at Scarecrow, I think it was the biggest day since 2001, I believe. It beat out 2008, if I remember right. So that was the biggest day for our strategies. So witnessing history in the sense of market with this greed and fear flowing through it in different ways.
In different ways, yeah.
Oh yeah.
Yeah. It was like 12%, I guess. 12% up NASDAQ at 2 or 3 days ago.
Yeah, it was crazy. You know, got a
Yeah,
lot of
crazy.
emails from clients. Thank you for being in the market today.
Yeah.
And then the next day they're like, "Oh, we're giving some back now." But I mean, but that's the reality of times like this. It's very, like you said with the VIX, there's a lot of volatility because a lot of people are kind of hanging at the edge of their seats. So I don't want to miss the good news, but I also feel like I'm hearing too much on the bad side, so I'm really hesitant to go back in. And I don't know. It's just that whole fear and greed concept is very interesting in times like now. And then people always ask, how do you quantify that? As like a trader, how can you really quantify fear and greed? And I think it really comes down to you can quantify the patterns of fear and greed, but I don't think you're ever going to be able to predict perfectly when Trump is going to say something per se. Some of that does come down to, I think, a little bit of luck with some timing systems. You can have reasons why you believe to go back in, but nobody out there has like oh, I know exactly what's going to happen today from the Oval Office kind of thing. So it's a very interesting time.
So do you think Trump tweet 2.0 has a bigger impact than Trump 1.0 tweet?
Do I feel like, oh wait, I think I heard that backwards. Can you rephrase that, please?
Okay. Do you think that Trump tweets 2.0 has a bigger impact than Trump 1.0 tweets?
As in the 1.0 being this past week?
No, the first term.
Oh, first term. Okay. Yeah, so I think so, because I think more people are aware of how he operates. Regardless if they like it or not, I think they're a little bit more aware. So I think that would impact it a little bit more. But then I guess you could also argue, this could change so fast on a dime, so maybe you don't, let's say, follow it, whereas you might have in the first time. So I don't know. I guess I can see both sides. The whole thing about that is it's just an extra level of volatility that's in the market. It's not directly a market thing, but it's almost like you got like the president risk.
President
Is a
risk.
new type of risk that you have to be able to evaluate within it.
Sure. Interesting.
Yeah.
Should I go next?
Yeah, you can go to the next slide. Yep.
Yep. Yeah, whether you believe the impact will be positive or negative both to the US and to China or to the rest of the world, but we have to notice that multilateralism is fading away, and the shift is going to be deal by deal, country by country, one on one. So that's the theme of today's global trade, I guess. So several years ago or several decades ago, they started to use G20, G7 countries, WTO, whatever you want to mention about the international organizations. But starting from today, I guess it's going to be one-on-one. Indonesia with US, US with China, China with India, India with Australia, etc., etc. That's the main theme of this trade war of this year.
Yeah, that's so sorry, I'm just sitting here thinking in the background. Because I guess, I've spent a little bit of time thinking about that, but on how the pros and cons of both sides. Like, what are your thoughts on the pros and cons of that? I'm just curious.
What do you mean about the pros? What pros and what cons?
The pros of moving to bilateralism versus staying where we were.
Yep. Okay. Even in an organization of just 5 people or 10 people, it's not easy to get like a unanimous vote, right? Where 10 people doing business together, each 10 parties doing business together, and they want to vote on something such as tariffs or the fairness of the industry or exchange. I guess unanimous votes, it's not that easy to get. So if you are joining some organizations, trade organizations or something, especially with 195 or more than 100 countries at least inside, there might be some 5 or 10 countries that disagree with some decision, but still this decision has to be made. But some will be disappointed with the results. And with bilateralism, you can get what you want with that country. And you have to think harder when you make a deal with one country, because maybe they have another deal with another country. So what President Trump was doing last 2 or 3 days, by postponing 75 countries on tariffs and just focusing on China, he gets to know the countries that will, if you know game theory, some will have their preferences, but they also think about the other player in the game. What are they going to do with this? And the impact is already, we can already see the impact on, for example, India. They have never said anything about the unfair trade. But today they said that, India also suffered unfair trade with China. Australia said the same thing. Vietnam said the same thing. Even Vietnam, which I guess some of international in the international world, maybe people will assume that Vietnam is close to China, but they also don't want to be associated with China at this moment. So, but the EU, the European Union, they are thinking if they should continue a partnership more with China than the US. So you can see the map of the coalition of business, of doing business, of doing trades. It has already moved in dynamic ways.
Yeah, no, it's just going to be very interesting to see how it plays out. I know when you were talking about Vietnam, wouldn't they would actually benefit from a lot more from, I think, not associating themselves with China because they could take advantage of some of those gaps or in the trade that they could end up losing.
Mhm.
Hmm. Yeah. So I mean, there's a lot to this, and honestly, I planned on digging into a lot of it this weekend, because it's been such a busy market week. So I feel like I'm learning a lot just talking with you right now, and it's cool to have your perspective, being that you're hearing what's going on in Indonesia too, so you have that perspective as well. So you're kind of see both sides of this too. So that's very
Yeah, and when China had difficulties with of sending products and goods to the US, they will flood the market of like Indonesia and other countries too.
yeah.
So it's kind of, you know, you have to rethink. You have to rethink with whom do you want to be associated with.
It's I think of it almost like it's reminding me of high school now. It's like you got to like figure out which group you're gonna stick with. You're gonna kind of have all these groups that are gonna not really as much associate with the other ones, and I don't know, it's something that I don't think we've really seen in a while out there. So it's that
Yeah,
whole concept is gonna be. I always use the word interesting because I can't think of anything else. I'm interested by lots of things, but it's gonna be interesting. But it's going back to the markets. It's going
yep,
to lead to some wild markets worldwide.
yep, yep. And I'm just gonna add another index or measurement that the CNN greed and fear that you mentioned before. It's at the extreme bearish level at this moment. And also the put to call ratio is also at the bearish level at this moment. Yeah, if you check the price of uh, put options, and it's getting expensive day by day. Yeah. For example, if put is at $100 and the call option price is about 75 or something. So the gap of the pricing is pretty much uh, at the bearish level today.
And I don't know as much about that. Is that tied to the
The
increase in the
volatility,
volatility that we're seeing?
yeah, yeah. And the volatility and the expectation is still at this moment is, yeah, still bearish. So the put is, yeah, the demand for put options pretty high right now. In terms of equity in the S&P 500 components, we see that the outperformers up to yesterday is the S&P 500 low volatility. So after Canada-Mexico tariff, the shift from growth stocks, high techs, Max 7, they rotate the investment first into international stocks, and second, in the US, uh, they put more money in the low volatility or low beta strategies. I guess that's the theme up to this week, or at least before the reversal in after the president postponed the tariff for 75 countries.
Well, that's updated through April 10th, right? Because that would have already had
Sorry?
that data in there. Isn't it updated through April 10th on there?
Yep. Yesterday closing.
Okay.
This is price only and not including dividends.
Okay. Got it. Trying to think if I have any thoughts right now. So you have down their question, is low beta strategy good enough?
Yeah, because some people will say that, oh, you will miss the upside when the market is recovering.
That's a whole another argument in itself right there. Because at Scarecrow, we deal with leverage instruments when we're trading.
Mhm.
So, you can have in markets like now, just think about the other day. I mean, that was a 25% day for us.
Yeah,
But
because of
we were taking,
leverage.
yeah, but we were taking, some decent declines before then that you needed a day like that. Like in a strategy like in leverage, I would say that you can't miss those days. That can make or break a year or be
Mm.
on the wrong side. I mean, that's going to crush you if you were inverse on that day. Um, but that argument is maybe a little bit different in an unleveraged situation.
Yeah. So you use SPY or QQQ or the 2 times leverage of those ETFs.
Yeah, we use 2 times of those. We use
Two
some right hedge
times.
funds, yeah.
Okay.
But it's interesting in times like now because you're seeing so many extremes on a daily basis in leverage,
Mm-hmm.
and you see the importance of missing a Thursday, Friday from a week ago and capturing a Wednesday of this week and the difference that can put on a year, whereas it looked really bleak before then. Um, but that's the game we play. I mean, just like they're playing the economic game out there, we're playing a market game in itself with
Mm-hmm.
just adding a 2 times component to it.
Yeah. Yep. Yeah. Actually, this in our strategy, actually we are a stock picking strategy. So most of our asset allocations are on individual stocks, and usually we have about 40 to 50% stocks that categorize as low or mid beta.
Mhm.
It's one or below, or even 0 point something. Um, and by, I guess, March, like 4 or 5 weeks ago, we started to add more on the low volatility stocks, low beta stocks. So now it's a significant majority of our individual stocks in the portfolio is in low beta stocks. About 75 or 80% of the equity holdings. But we prefer low beta stocks that are still growing the EPS faster than the markets. So you can kind of have a situation of low volatility, but still have a strong growth in the future. So you don't miss the if the market jumps a lot, you don't miss a lot. That kind of situation.
Yeah. No, that makes sense. It's interesting because I always think back to, I guess, the human emotion side of thing. I mean, fear and greed is
Agreed.
directly in the market, but it's also can be in your retail clients.
Oh
Um,
yeah.
there has been a lot of times where, well, I mean, I even know a few clients that were in, let's say, that strategy that had I guess you could say, a really good week and missing the down days and then coming back in, but were, I think it was after Thursday, after the first time, they're like, I understand the strategy, but I just want to go to cash. And so I guess they missed Friday, but they've kind of missed out on about this week. But the hardest thing is, I always say it's a lot easier to get out when you got that fear going on. Sometimes what the thing is that these strategies help out with is telling you when to get back in, because it's really hard to pull the trigger. Even in 2020, I know some people who went out in March, but didn't get
Mm-hmm.
back in until I think it was like August or September. So it was a very long time sitting out,
Yeah.
even as they watched the market recovering earlier in the year, just because there were still thoughts that no, we're going to hit another decline. It's really hard to get back in, and that's where I
Yeah,
think,
it's really hard. Yep.
yeah.
Yeah.
So that's something that's just always on my mind in times like this. Like,
Yeah.
I always ask them, when do you think you're going to get back in? And I've never had a really good answer from clients on that. Like, well, you tell me when to get back in. I'm like, well, the strategy's in. So
Yeah, I guess there are some people that went out of the market in maybe Monday or Tuesday.
are
I
you asking
guess
me if there were some people?
no, based on my experience,
Oh,
and I guess some of other investment manager also. I guess there are some, not many, but some people that maybe just several hours before that tweet, that historical tweet.
I had so going back to just how crazy it was on Monday, I believe at one point like the futures were down, was it like 3 or 4% or something like that? And I had one client reach out and saw that we were going back long that day and was like, "Are you looking at the market? What in the world are you doing?" And we know how that day ended. I mean, it had a complete change and actually ended up slightly up if for the Nas at least the Nasdaq 100. Um, but the human emotion aspect of it in times like now, and I don't know, it's fun. It's fun to watch and observe from afar, but it's can also be very frustrating if you're not catching it too. So I don't know. It's it's interesting.
Yeah, it's very, very interesting. It's a very interesting moment. So it 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 plays with our emotion deeply, and you can see just like the tires that we were talking about, that puts the emotion for world leaders as well. Just like the emotion of the traders and investors today in the market is deeply touched actually.
Oh yeah. Yeah, there's a lot of that going on, and I think I heard at one point like somebody was saying that Trump wanted to hold off a little bit longer on the delay, but he saw how it was impacting the markets and
Mm,
thought that there would be a way to bump it up with the
yep.
delay on that. So I don't know. It's like, and then you think, is that an emotional decision? But I also believe that was tied something to, or they saw something that was tied to the U.S. Treasuries, that they were
Mm,
losing some investments in that because of
mm,
everything going on, and that was a big signal for like, hey, we should probably bounce back this market a little bit, give us at least some hope. But yeah, I mean, you got,
yeah.
let's say from top level, your strategy as a leader of how you want to go about that, and then the market, you got to like balance that in too. Is you got to think, oh my gosh, it's a lot going on. It's a
Yep. Yeah, I guess actually, if you see X today or several days, if you're pro to the president, then you say it was brilliant strategy. But if you are against the president, you would say he surrenders.
yeah,
So it depends on the views.
yeah. Everybody's gonna have an opinion on, and on
Mhm.
what they believe I'm in the wait and see approach right now. I'm watching it, and I just feel like things change so much. I can't take everything
Yeah,
at face value as it is right now. We'll see. We'll see in
yeah.
the long run.
Maybe that answers why the name index is at 50 something. So it's like a wait and see kind of situation.
Yeah, and I know there definitely are a few that see that as a buying opportunity by the Wednesday time period, just based on what was going on previously. Even if it's a short-term buy opportunity, um, that was the case. So yeah, I mean there's a blend of so many different types of managers in there. So really when you see it go down to those 20s, that's when I find that very interesting, or probably below 40. Because that means that there's a lot of agreement between a lot of different types of managers where they're looking short, long term, or whatever aspect of the equity market they're looking at. Because we all evaluate it in different ways.
Yeah.
I can't remember. Is this the last slide, or is there another one?
Yeah, I guess this is the last one.
Okay. Well, I'm looking at the time. I mean, we've definitely done our time here at 40 minutes. I don't know if you have any other last thoughts. I've definitely enjoyed this conversation and feel like I'm learning a lot, and I'm gonna think about it over the weekend and get ready for the next week.
Yeah. Yeah, we have to prepare whatever happens next week.
Oh yeah.
Yeah, I enjoyed this conversation, and I learned a lot about your strategy as well, because previously I just visit your website and learn uh, about the strategy on the bigger picture, but now I know a little bit more about the strategy itself, the Scarecrow strategy.
Yeah. I mean, I like to talk much more about at least in this, I don't want to really promote anything, but I mean more on like the emotional side of what I was
Mhm.
witnessing, but also putting into context just like how I've seen some of these days change something for active managers. Because I know we're not the only ones that were in either a similar boat, or I know some managers that are doing really, really well this year. They caught a lot of the downside volatility, and they even caught the Wednesday day as well. So they're up like 30% or so. So it's a year there, whenever there's fear in the market and the market's going down, that there's also a ton of opportunity. And I know there are some managers that are taking a lot of advantage of that. So
Mhm. Yep. Uh, in our team, we predict that the market will be a little bit sideways up until the next, maybe dealing with China, or either with the stimulus such as the next tax cuts.
yeah, I know. I think it's
Sideways, it means like maybe +3, next day -3, and so on.
I can see
But
that, and I think
but
that can be a good thing for some strategies if you can catch it. If you can take it,
mhm,
if you have something that can change quick and catch a lot of that, or you're just well positioned to ride through that. That could be really big too.
yeah,
But
uh,
it's going to be a fun market. I know we don't
fun.
like to put the word fun on it with everything going on, but in reality, sometimes you gotta look at the kind of market we're in right now, and realize it's going to be the ones that you talk about a few years from now, you reference back, even, 10 years from now or so on, that you remember. And it's nice to see, I guess, kind of the influence that you could say on social media, or that
Mm,
um, stuff like that has over the market, and learn from that.
yeah.
Because, it's always we didn't have that back in as much in '08 or whatever. And we're getting it a little bit more now. We're seeing how fast things can change, with that as another influencing factor.
Mhm.
So
Yeah. Yeah, it's interesting that in just about 5 years, we already got COVID crash, and then fast recovery, and then high inflation and Fed rate hike in 2022, and then today, right? We have like 3 or at least 4 interesting moments. Oh, last year was election, and yeah, about maybe 3 or 4 very interesting moments in just 5 years.
It feels like everything is moving faster. Just kind of like if you think about life so and so many years ago. I mean, heck, even when I was younger in the early 2000s, like life is so much faster now with all the technology, and that's this not just this case for your personal life, but that's making that kind of impact in the market too. So yeah,
Mhm.
just adds a whole nother element to it.
Yep, agreed.
Well, I could definitely keep talking. I'm really good at the Minnesota goodbye, which is a thing here in Minnesota where we just keep going, asking questions, and all of a sudden 40 minutes passes by. So I do want to end this before I get caught doing
Okay.
that. But thank you so much for coming on here, especially with it being super early in the morning over there in Indonesia, and just giving us all the insight that you had. It was very nice having you today.
Yeah, it's very nice talking to you today.
Great. Well, I'll catch you on another call here soon or at a NAIM conference in the future sometime. And
Sure.
we'll see you there. And we'll catch everybody here at the next